Good evening and welcome to the Money Show, the show that puts your money matters front and center in a world full of financial noise. We are here to bring you clarity, confidence and control over your personal finances, whether you are planning for retirement, building a portfolio, navigating debt or just trying to make smarter money decisions. This is your space, your guide and your check-in with your wallet. Every evening we bring you insights from top financial experts, decode the latest trends and answer your burning questions on saving, investing, spending and everything in between, because here on the Money Show, we believe in one thing. You don't have to be a finance expert to take charge of your money. You just need the right advice. So let's dive right in. We have a lot of topics to cover as far as your investment strategies and options are concerned. But then before that, let me flash our WhatsApp number and email ID where we want you to send across your portfolio details in case you want any help from our experts in terms of any recommendation or strategies for your financial goals. Send across your queries on our WhatsApp number, which is 865-797-4571, or our email ID, themoneyshow@etnow.tv. So that's the place where you can reach out to us and seek our help from our experts. But then let's move on. And it's been a blockbuster July for India's mutual fund industry. Equity mutual fund inflows have hit an all-time high. We'll be flashing those numbers on the screen as well. 42,702 crores. That's an 81% jump over June, marking the 53rd consecutive month of positive flows. That's right. And even between that, sectoral and thematic funds lead the change with a massive surge, while SIP contributions touched a record high of 28,464 crores. So the question over here is, what's driving this investor rush into equities? Is it a sign of renewed confidence or a herd chasing short-term opportunities? Debt funds also bouncing back strongly after 2 months of outflows. Are we looking at a broad-based revival in mutual fund participation? Joining me tonight and to decode the numbers and the sentiment behind them, I have with me Mr. Venkat Chalasani, CEO of AMFI. Mr. Venkat, hi, good evening and welcome to the show. Let's begin with the record inflow numbers. Equity mutual fund inflows in July hit an all-time high of 42,702 crores, 81% jump that we noticed as compared to June. What factors do you think drove the unprecedented surge? And before you answer, let me also congratulate you on these record-breaking numbers in July that we saw.
Yeah, good evening, Kavita. Thanks for having me on your show. As you rightly mentioned, we have seen record inflows in the equity. While we are seeing certain headwinds in the form of the US trade war, tariffs that are being imposed, there are certain headwinds, but people still believe, are believing in the India growth story. And that's the reason why the inflows are coming into the system on a continuous basis. If you look at the data that has come, be it from the RBI, be it from the IMF data, everyone talks about the growth of the Indian economy from 6% to 6.5% within that range, despite all the headwinds. There are many tailwinds which is supporting this particular factor, and the investors are believing in it, and that's how the flows are coming in.
So I also want to focus on the retail participation as far as SIPs are concerned. Once again, a record high number going beyond 28,400 crores, 91 million SIP accounts. Now, how is AMFI ensuring the first time and small investors stay invested during market volatility? Because these are the new investors, first time investors also who have just experienced equity markets, and looking at the volatility, despite that volatility, we are seeing these numbers. This is really a benchmark on its own. But then having said that, how do we ensure that these investors stay invested?
Yeah, there are two things. One, as you were right, absolutely right, to this month also we have seen 28,500 crores coming in, nearly 28,500 crores coming in the form of SIPs. What we are doing is, we are, as you are aware, in the form of investor awareness and education, we are continuously doing online and offline programs across the country, explaining to them about the volatility in the markets and the need for the people to stay put if they believe in the India growth story for a long duration rather than getting worried about the short duration. So same, be it through the digital media, be it through the print media, be it through the TV, be it offline, when we explain, we are continuously explaining to them that volatility is a temporary phenomenon. Yes, it's going to be there. Markets, all investments are subject to market risk. But however, if somebody who has a belief in a long-term growth story can stay put, and that's what is being demonstrated in the continuous positive flows in the SIPs. One more redeeming
Right.
feature, Kavita, is the contributing SIPs also, which we started publishing the numbers. Even the contributing SIP accounts have also gone up. And as we speak now, it's more than 9 crore contributing SIPs, because we do have something what we call as live SIPs, and we are also looking at contributing SIPs, and even that number is going up.
Sir, but the icing on the cake, or maybe something that worth observing, is sectoral and thematic, where we saw a massive jump. 1882%, that is the kind of inflow we are talking about. Is this a sign of increasing investor sophistication or a risk of over concentration in specific themes? Are the investors chasing returns for short term?
There are two things. One, of course, we have seen the new NFOs come up in thematic and sectoral schemes, and that has brought some of the good flows into this particular uh, area, in this particular category during this particular month. And secondly, I know at the cost of repetition, I keep repeating the same thing. The growth story is, people believe in that, and therefore the investments have come in this particular space.
We also have to talk about the debt fund comeback. Debt funds also saw inflows of over 1 lakh crore in July after 2 months of outflows. Now, over here, do you see this short-term liquidity-driven move or a structural shift in investor allocation? Also, we should really not forget is the NFO number that we saw coming up in July. Almost 30 schemes that were launched, and even within that, we saw a massive fundraising done from 5 debt funds that were launched, almost 18,948 crores coming from 5 debt funds, and the rest of it was from equity schemes and from passive funds as well. So yeah, how do you look at this revival of debt then?
If you see the pattern normally, Kavita, up to June, you find people withdrawing. That's what is witnessed in the last month. But in the month of July, again, we see the trend, July, August, we see the trend, positive flows coming into the space. And again, at the quarter end, we find withdrawals. The same thing is witnessed in this particular month as well. And whatever growth that has come is seen more in liquid, more in overnight and short-term, short duration funds. So people are looking at that the interest rates are likely to stay put, and they are investing in surplus liquidity, whatever that is available. They are investing in the short-term space, and therefore the majority of the flows that we have seen in this particular month were only in the short duration period.
All right. One more thing that we really need to understand is how much of this would you actually attribute to NFOs? Because 30 schemes have launched. The debt figure I just told you. Apart from that, if we look at the numbers coming from 13 passive funds, brought in almost 584 crores, and two hybrid schemes also that mobilized almost 1887 crores, and the other 10 equity funds collected almost 8997 crores. So that's a big number coming in from NFOs. Is that also one of the reasons why we saw such a jump in equity inflow for July?
Correct. So NFOs, you will see new AMCs also coming up. The NFOs, part of it, they have come out in the money market space, in the fixed income space, and particularly in the short-term duration. So people, there are two pieces. One, we have found the majority of the money coming from the short-term fixed income and of course, as I said about the sectoral. So both these together have got a major chunk of the flows that are coming in the NFO space. So as far as the fixed income part of it concerned, as I said, the majority of the flows are coming from the short end, short duration, but into the equity, people are looking at the long-term growth story, and therefore the monies are coming there.
All right. So, are we also expecting this momentum to continue, or you think that it's just a one-off spike that we saw? Because a lot of conversation narratives going on, within these fund houses, or maybe the investors as well, because these are the new investors, first-time investors are there in the market. Are we also talking about a purpose-driven investment strategies because of which these investors are coming into the market? Is it the market volatility, or do you think it is just a one-off spike because of the volatility, and then again when the returns might just coming up, these investors want to diversify across asset classes?
What we have observed in the month of last month was a slight dip, although the flows were continuing, but there was a slight dip in the flows. But in the month of July, what happened is the DIs, the retail investors have shown confidence and they put the monies. But overall, if you look at, there is a negative mark to market. There are FI flows. They have withdrawn the money from the equities markets, and therefore, despite the good amount of flows to the extent of around 42,702 crores, we have seen a negative growth of around 61,770. Means essentially negative mark to market of 61,770 crores. That's because of the withdrawal by the FIs and resulting in the negative indices in the equity space. But having said that, I'm expecting, looking at the way the trends are looking at the trend, I'm expecting the flows to continue to remain. But of course, there'll be ups and downs depending upon how the market shapes up. But the trend would continue to, people would continue to invest while there can be certain ups and downs.
All right, last question to you, sir. Investor education, with so much money flowing into the equity funds, what new investor awareness or risk communication initiative is AMFI planning to prevent mis-selling or hurt behavior that we usually see during such times?
We as an AMFI, as a trade body, on a continuous basis are using all the media to communicate about A, the various products, B, the risks that are involved in investing, and the need for having a long-term plans, long goals, and setting up their own, identifying the products which are helpful for them to achieve those particular goals. Our objective is to not only market the products but also explain the risks. So and in a very, very transparent manner, the entire disclosures are being made. If you visit our site, which I'm sure you do on a regular basis, the disclosures that we do, be it in the form of the investments are happening, be it in the form of returns, be it in the form of stress tests are being done, those disclosures are being made very clearly to the investors so that they can take an informed decision and make investments. So products, risks, and disclosures that which leads to that, what we're looking at is a trust on this particular industry, and people would continue to invest in this space.
All right, Mr. Venkat, thank you so much for taking time out and helping us with these numbers and the story between the lines. That's very important for the investors to read in. Thank you so much for an exclusive interview. Thank you so much.